Thank you. Thank you very much. Maybe we can adjust the microphone a little bit. Thank you. It is my great pleasure and my honor to be invited to speak to you today on access to finance constraints in Belarus. I've been personally working in the country for the last 3 years on financial sector development, access to finance, but also financial stability aspects that we see in the country with different stakeholders. Today I will talk about exactly that, the access to finance constraints that we see. We conducted a financial sector assessment program in 2014, and I would like to present to you the key headlines of this assessment. I will then talk about the policy responses and World Bank operations in the region that are currently ongoing and in the process of preparation that are targeted to tackle these constraints. And finally, as Julia already mentioned, I will briefly touch upon the current project preparation, the project the World Bank is developing together with the authorities on enhancing competitiveness in Belarus, and in particular the access to finance component, a line of credit targeting small and medium-sized enterprises. So the development model FSAP that we conducted in 2014 basically provides the baseline for our policy discussions and our operations in the country. What did we find? I have to say this has been 1.5 years ago, so some of the aspects might not be as up to date, but I think most of the aspects we are discussing we're still facing in the current context. So what did we find? We found that the macroeconomic outlook remains fragile with risks of reignited inflation and exchange rate pressures. We found in the banking sector high and volatile lending rates, especially when we look into domestic currency lending as sources of funding for the private sector. We found high concentration and dominance of state banks in the system. And we found, again, huge state influence in capital allocation through state-directed lending programs that mainly go to state-owned enterprises rather than private enterprises in the system. We also saw unrealized development potential of non-bank financial institutions. We think there is scope for development of capital markets as an important provider of long-term financing. We do see an important need to expand the role of the insurance sector as an institutional investor. And we think it's important to further facilitate the enabling environment of microfinance institutions, but also alternative sources of financing, including leasing and factoring. And I have to mention a lot of reforms are already ongoing in the system right now. Just to mention a couple of them where the World Bank has been actively involved. The National Bank of the Republic of Belarus is currently working on revisions to the secure transaction framework, including the establishment of a collateral registry for movable assets. Secondly, the reform package on further increasing efficiency of state-directed lending as well as reducing state-directed lending, which is currently being discussed by the authorities. Then Development Bank launching a very important pilot on SME financing. I think that is, from our perspective, very well designed and will form the basis for our cooperation going forward. And lastly, to mention one more aspect, the mega regulator discussions, National Bank becoming a mega regulator for all sectors of the financial system, including insurance and capital markets. That is a discussion that we're currently having with the authorities, including how to support further financial sector development. Now, just to briefly show this graph, which I think reflects very nicely the constraints that private sector enterprises are facing in Belarus, and I'm obviously also in the Q&A session very interested in hearing from your personal experiences in accessing external funding. So what we saw is that, well, access to finance, and I think we all agree, is an important factor for growth. It has been increasingly becoming difficult for private enterprises to obtain funding. And what you see here is basically the impacts of the 2011 crisis, where the portfolio there was a shift basically in bank lending portfolio to state-owned enterprises. You can see the drop of 34% of lending to the private sector versus an increase at the same time of financing going to the state-owned enterprises. I also wanted to briefly touch upon financial inclusion of households, the population in Belarus. I think it's an important aspect to consider, and the World Bank has recently conducted a financial inclusion survey for the second time all around the world. It included more than 180 countries in the world. And what we do see is that Belarus, in terms of access to bank accounts of the population, is performing actually quite well compared to peer countries, including peers from the upper middle income segment. We see that the population, the number of adults that actually had a bank account at a formal financial institution went up by 13% to 72% in 2014. And as said, this is very much in line with other upper middle class countries. The only outlier that we see, and I think that's an important thing to consider for further policy discussion, is the young adults, access of young adults, which is for us in our definition aged 15 to 24 to a bank account at a formal financial institution. And there we see that only 48% of these young adults have a bank account versus, just as a comparison, 58% on average in upper middle income countries. Now, going back to what I'm sure interests you the most is access to finance constraints for enterprises. Julia already mentioned World Bank is conducting enterprise surveys on a regular basis. What we found when we compared the 2008 to the 2013 results on interviewing small, medium, and large enterprises is that especially small and medium-sized enterprises have become increasingly constrained when it comes to accessing external financing. And maybe as an average, in 2013, what we found is that 19%, and what we're surveying here is private enterprises. So we found that 19% of private enterprises identified the lack of access to finance as the single most important obstacle to doing business. This is also shown in the current graph, where we try to reflect the financing gap. What we see is that only 1% of large firms surveyed in 2013 mentioned a need for further credit, compared to 35% of small enterprises and 23% of large enterprises. Also, maybe interestingly, in this graph is the question that we posed in terms of, does your firm actually need a bank loan? And there, the answer was that a total of 41% highlighted that they actually did not need a loan. And that is an interesting finding, and I think much has to do with, as mentioned before, the high interest rates in local currency, the volatile macroeconomic environment that dampens the appetite enterprises to further invest. But also the choices that USD enterprises have in terms of accessing financing. There's high collateral needs and requirements that might dampen or might limit your access, but also the variety of products that are available. And I think that's an important point to make in this discussion. That we need to think about how to address the different types of constraints, and especially when we talk about small and medium-sized enterprises, what we find is the different financing needs at different stages of development, and it really depends on the enterprise itself what is needed. For example, and my point would be that effective financing models need to rely on a variety of different products that are to be offered to small and medium-sized enterprises, including, for example, local currency financing to non-exporting firms. Then there are long maturities that are needed for investment financing, working capital loans, but also focusing on different providers of financing, for example, leasing for companies that have less access or have less collateral in their portfolios. So, as mentioned, a lot of work is already ongoing in addressing these financing, access to finance constraints, be it on the legal and regulatory framework side, the enabling environment, the infrastructure, but also in terms of further developing financing sources and products. And I just briefly would like to walk you through our 5 main policy checklist items that we always consider in countries when we go in and work on access to finance. One is obviously addressing the information asymmetry, and further work I think is needed, especially on the corporate financial reporting side, but also the existing credit reporting system, which I have to say is already very well developed. Secondly, already mentioned the secure transaction frameworks and the registries for movable assets, I think is an important reform agenda that will further facilitate access to finance for enterprises. Then addressing weaknesses in the insolvency and creditor rights framework, restructuring of companies we see as an impediment. And lastly, lack of financing sources and products, and this is where we work closely together with Development Bank and other authorities. One item is credit lines, and I will talk about that in more detail, but also guarantee schemes, the use of development banks in specific countries to foster and address certain financing gaps in the market, but also reforms to encourage leasing and factoring. And finally, financial capability as an important aspect. It's not only about the supply side, but also about demand side. I'm also talking about households and the population. Obviously, it is important to match from our perspective, when we develop a project, it is important to match the financing with the technical assistance, with the capacity building and knowledge sharing, as well as awareness raising activities. So, especially since the crisis, the World Bank Group has been extremely active in Eastern Europe and Central Asia by providing technical assistance, but also financing instruments to further address these financing constraints. Maybe just to mention a couple of select projects that are currently ongoing. In Bosnia-Herzegovina, we launched a line of credit to enhance access to finance for SMEs as a response to the 2008 global financial crisis. We have an ongoing project in Ukraine where we focus on export development. Croatia, we're working with a guarantee also again to foster export financing. And there's a number of technical assistance that the World Bank is offering, including on corporate financial reporting improvements, but also non-performing loan resolution, and so on. And finally, I would like to briefly talk about the Competitiveness Enhancement Project, which was already mentioned by colleagues from Ministry of Economy and Development Bank, that is currently under preparation. Unfortunately, since it is under preparation, I'm not able to share with you the details of this line of credit that we're working on. Maybe very broadly to tell you, the request came from the authorities for the World Bank to support them in enhancing Belarus' competitiveness. So this project is a wider project that tackles all kinds of aspects in SME development, but also access to finance and so on. And I think especially in the access to finance, we have this long-standing cooperation, so we have been actually learning in the process from the pilot line of credit that Development Bank has launched by talking to bank representatives in the process of preparation. So we hope this project, which will hopefully become effective in mid-July next year, will have a positive impact in accessing foreign currency financing for SMEs. This is going to be the target group for this line. And maybe to add to this, I think our work with development banks all around the world is a very crucial and important one, as they have an important role to fill the gaps that are underserved in a certain country, in a certain segment of the market, and to provide the type financing in terms of the quality of financing that might be lacking. And I'm thinking about the longer term maturities that are needed to actually foster investments in the economy. And interestingly, I think, which is a guiding principle for us going forward, European Commission recently issued a communication where they advised member states to look into establishment of national promotional banks, obviously along the lines of very clear governance, corporate governance principles, and we heard already today how important that is. But I think that shows that development banks play an important role in being there in terms of crisis as the counter-cyclical buffer that's needed, but also in terms of serving the underserved segments. With that, I think I have not more to say than that I hope I will be invited maybe next year to present to you the first positive impacts of this line of credit that we are currently designing together with the Development Bank. As said, the work is in progress, and we hope that the financing will become effective by mid next year. Thank you very much.